welcome back to MemeCoinNinja, and in today's video, we are diving deep into the hidden world of meme coin trading. Have you ever wondered how some traders always seem to win big while others are left holding the bag? Well, it's not luck, it is a clear manipulation. By the end of the session, you will not only know how these tactics works, but also how to protect yourself and even leverage some tools to stay ahead. Let's jump right in. Let's understand the meme coin market first. Meme coins are unlikely traditional cryptocurrencies. They thrive on hype, community buzz, and social media trends, often with little to no utility behind them. But here's the catch. The small meme coins are highly volatile and ripe for manipulation because their markets are thinly traded. Whether it's a right or a wrong tweet, it can send prices soaring or crashing. So meme coins are a double-edged sword. If you understand the rules of the game, you can play it smarter than the most traders. Now, let's see how the market manipulation works. Let's pull back the curtain on how the manipulation happens point by point. Inflating the price. Whales or a group of traders start buying large quantities of a meme coin. This creates an illusion of a price momentum. The next is simulating the high volume. Here is where the trick begins. Manipulators use watch trading, which is nothing but buying and selling among their own wallets to create some fake activity, making the coin to appear hot, which leads to a new investor's attraction. Here is where the FOMO begins. The social media buzz, Telegram groups, and influencers pile on, drawing in the retail traders who don't want to miss the moonshot. At this peak, manipulators begin offloading their holdings in small chunks. When their sell-off completes, the price plummets, leaving the latecomers holding worthless tokens. Also, be cautious of the sudden price spikes with no substantial news or real-world backing. These are often orchestrated. Now, let's discuss on the tools to track activity and spot trends. The blockchain explorers like solscan that I have told in many videos. Track the wallet activity in real time and always look for patterns like repeated transactions or large transfers that hint at market manipulations. The next is the community platforms. Identify the coins that are being hyped by the influencers or the groups. Early awareness can help you spot the opportunities or avoid the traps. The last one is the sniping bots. Example like the Trojan bot, BonkBot, or GMGNI. Timing is crucial in meme coin trading because sniping the bots executes the trade at lightning speed, giving you an edge when entering or exiting the volatile markets. So, by monitoring the wallet behaviors and using the above tools, you can spot the manipulation before it impacts you. Now, let's talk about protecting your investments. Meme coin trading is high risk, but you can manage that risk with a disciplined approach. Diversify your portfolio. Never go all in one coin. Spread your investments to reduce the risk. Set the limits. Decide how much you are willing to invest and lose. Stick to these limits no matter how tempting it is going to go bigger. Use stop-loss orders. If your platform supports it, set the stop-loss orders to minimize your losses in case of a sudden drop. Stay informed. Monitor the social media, Telegram group, and other communities as meme coin prices are often influenced by the sentiment and announcements. Emotional trading is the fastest way to lose, so stay logical, stick to your strategy, and don't chase the pumps. Meme coins are exciting, volatile, and often unpredictable, but with the right strategies and tools, you can navigate the chaos and find the successes. If you want to improve your meme coin trading, check out my other videos for more expert strategies and insights. If you found this tutorial helpful, don't forget to like the video and subscribe to the channel for more insider tips and strategies.